Hey, it's Lucero Boy, and today we're going to see where I am in my personal finance journey. I started becoming very involved in my personal finance at the beginning of 2020. Now that it's been 6 months since then, now I want to look at how far I've come along since then. Subscribe to follow along in my financial journey. I don't just talk about the top 10 ways to manage your money, I actually do the things I talk about, and I only talk about things that I understand. I not only talk about budgeting and investing, but I actually do it. I'll show you what exactly I'm doing because I have nothing to hide. Personal finance should not be a taboo subject. If we talked about finance more openly with each other, I think we all would be much better prepared in our financial journey. So drop a like and let's see how I'm doing. Okay, so a quick summary of my living situation. I live with my parents and I have very low expenses. Thus, I must be responsible with my money and I can't just waste it on things I want, because when my family is being so supportive and generous, I need to make sure that I'm making the right decisions with the money I am saving. I started 2020 with a salary of $47,000 and I had a net worth of about $40,000 among my investments and my savings. So the 3 goals I laid out for 2020 going into 2021 was I wanted to invest $25,000 into a taxable account and build a passive income with dividends. My second goal is kind of a sub goal from that, just the end result of investing so much money. The second goal was to have a $70,000 net worth by 2021. And my third goal was a challenge goal to reach a $100,000 net worth by 2021. So to achieve this goal, I started by creating a budget to ensure that I could reach these goals. The budget made sure I had enough cash on hand between my checkings and savings account while regularly investing my money. I also completely automated my income distribution to guarantee that I have $25,000 invested by 2021. So we're 6 months into my journey. So how am I doing? I don't want to give away the ending, but I've achieved at least one of those goals already. Let's look at how I'm budgeting. I do have a link in the description leading to a template of this budget. I also have a video that goes in depth on how to use an earlier version of my budget template. Okay, so I like to be very conservative with how I budget to keep myself as safe as possible. I overestimate my cost and I underestimate my income and my savings. I start with my income after taxes and contributions, which is about $1,300 bi-weekly. So if we look over here, you can see I just wrote in, this number doesn't do anything, $47,000 a year, and I take home about, for each pay period, I take home about $1,300. In order to achieve my main goal of investing $25,000 by 2021, I started by subtracting that $25,000 amount every month from my income. So my investing is about 77% of my income, or $2,083 monthly, or $480.77 weekly. I then estimated my bills such as insurance, gas, and maintenance, and this comes out to be 14% or $400 a month. And if you want to see a brief breakdown of some of my bills, I have, my life insurance, I had like an AMC thing, I had gym membership, I had Nintendo. I factor in gas every week, $30, even though I spend much less. And then I have an estimate for car maintenance, and then I have my monthly car insurance. So after taking out my investments and my bills, I have my discretion. The discretionary spending is stuff I can spend on whatever I want, maybe like going out or just having fun. My discretion breaks down into about 8.72% of my total income, which is about $236 per month, or only about $54.61 per week. Even though $54 isn't a lot of money per week to have fun with, I still have a goal that I'm determined to reach, so despite how little that is, I will still follow it. So you'll notice that I have nothing allocated to savings. When I first started out in the beginning of 2020, I had a little bit of savings. I would say about maybe like $2,000-ish of savings because I really didn't have any expenses. However, before you or anybody invest, you should have at least 3 to 6 months of expenses saved up so that any money that you invest into stocks, you never have to withdraw that in order to pay for your emergencies. With the current climate of 2020, it has only emphasized how important it is to have that emergency fund. The reason why I wasn't super focused on savings at first was because I still live with my parents, and I'm in a very safe financial position. So even if something were bad to happen, I know that I would still be supported. However, that is not the best mindset to have, and I've realized this as time has gone on. So that's why I know to give me peace of mind and for me to be able to carry my own responsibility on my own, I need to save more money. So I've done those steps throughout this year. So I'm guaranteed to invest $25,000 by 2021. I'll have some cash for fun and I'll have enough money to pay for all my bills. I'm proud to say that I did follow this budget and I did even better than expected. It's not only important to have a budget, but you also need to track if you are following this budget properly. So I made another spreadsheet to track how I'm doing monthly and track where my money is going. Even though I have automatic investments going in, sometimes I spend less on discretion, believe it or not. And I need to make sure that extra money goes into my savings and not towards maybe a new phone or some new game that I don't really need. So this is my monthly report. I have all my income over here in this green column. I have all my discretionary spending in this blue column. This red column has all my bills, and this breakdown over here is my investments over the year for my Roth IRA, my taxable account, and my savings account. So I have a little summary over here so we can go over exactly what all this data breaks down into. So far I made $20,733. I've invested $13,000. I've spent about $2,000 on bills, about $900 on discretionary. I have moved $3,600 into my savings account. The $761 of extra is not an expense. That's more money that I've added to my checkings account to give me more of a cushion in case I need to pay for more bills or any emergencies, things like that. These next columns over here will show us how well I'm doing compared to what my plan was. So you might be wondering, how come my earnings per month is actually higher than my planned amount, which my planned amount is $1,300 from my salary, but for some reason I'm making $3,400. I like to be very conservative with my estimates. So my income does not include any of the bonuses that I get, any of the tax returns I get, the stimulus check that we got, and the money that I made through selling some assets on eBay. That's bonus income, so that's something that I didn't account for. It's good not to plan for this bonus income because maybe it won't happen. Like that stimulus check, I didn't know that was gonna happen. The tax return, you know, I always assume I'm just gonna owe money. You know, like if you get extra money back, then that's good for you. So as you can see, how much money I should have now is about $16,000, but instead I have $20,000, so I'm about $4,000 ahead of where I probably would be. Because of my increased income, it will affect the allocation of my money. So if we go look at the next row, you'll see that my contribution to my investment is actually lower. We already know that I'm contributing a fixed amount every week to my investments, so despite the fact this percentage being lower, it is only lower because my income was much higher. That just means that I have more income to allocate to savings, for example. The next part is to look at my bills. So far, I've spent $1,900 on bills. My target, or my expected expense, would have been $2,365, which is actually $424 less than the estimate. So now I have $424 laying around. You gotta remember, now I have extra money. Where am I gonna put that? Now we have my discretionary. And you see I spent $890. My expected was $1,400. And now you're wondering, how were you able to cut that so low? And I don't mean to brag or anything, but I never leave my house. So I've cut it down by about $529. So now I have $424 and $529 extra. Plus, on top of that, I have the $4,447 that I earned through bonuses and other things. So what did I do with that money? So I didn't have anything allocated to savings. So I put $3,600 into my savings. And that's from all the extra money I have. And then that's where the last $761 comes in. That's from me just leaving it in my checkings account. I'm not going to spend it on anything. That's just money that floats in there just to keep me safe if I need to spend a lot of money on like maintenance or a bill or some kind of expense I wasn't expecting and I don't want to take directly from my savings right away. Basically, I increased my income, I saved on bills, I saved on discretion, which ultimately was added to my savings. Now, if you're keeping track in your head, you might already see what goal I've already achieved. I didn't increase my investments, but I did earn more and I did save more. Let's go to Mint. I highly recommend using Mint to track your spending and how much money you have. So I'll keep this on the side as a little bit of a foundation for what I'm going to describe. Okay, so between my checkings account and my savings account, I have about $8,387. My taxable account and my Roth IRA account are valued at about $36,000 or $37,000. This gives me a total of about $45,000. Remember how I said I was conservative and I didn't factor in my, contributions, my 401 contributions? I only factored in my taxed income. Well, we're gonna start adding in my 401ks and my other untaxed accounts. My 401k total is $16,000. My life insurance is $7,700. I include my life insurance because it's kind of like a savings account. Yeah, a portion of it goes towards the insurance, but the other portion is actually invested and I'm actually able to take from it. So after adding all of that together, my total comes to be about $69,395. What I also didn't include is I have an HSA account. Yes, with an HSA, you want to focus on using that money towards medical bills, but you can use some of it with penalty. My HSA account has $1,287, which then gives me a net worth of $70,683.28. Actually pretty amazing. I thought I would land around $70,000 by 2021. Of course, I could have diligently calculated my 401k and my HSA contributions, so on and so forth, but this was like a really nice surprise to have. I was only planning on the $25,000 of my investments to increase my net worth, but all this little money that I'm giving in my contributions on my paycheck and things like that have actually really increased how much money I have. So now the current projection is I will have at least $82,000 by 2021. If I can get some side hustles together and realize some returns on the assets that I own, I might be able to hit $100,000 by 2021 as a realistic goal now. Of course, this is all dependent on if the markets remain stable and at least break even by the end of the year. This is why net worth isn't exactly the best goal to have. It's nice to see a big number of your assets and cash, but you have no control over the value. Let's briefly look at my portfolios. Okay, so you're gonna see some of my stock holdings, and big disclaimer, I made a lot of these purchases without knowing what the heck I was doing. I was following some YouTubers, they told me to buy this and that, and then I changed my mind and I wanted to buy this and that instead. So what ended up happening was I bought a lot of some things and I bought a lot of other things before settling on a portfolio that I wanted to keep long term. But I didn't want to just sell the stocks that I already bought because then I would realize a loss. So I might as well just keep it, I like to remind everyone that my goal is dividend income. It's not about growth stocks. It's not about, boom, I invested in Tesla stock and now I'm up 80%, which I actually am for some weird reason. But regardless, it's about creating a passive income over time. So when I hit a certain amount, the dividend income can supplement my current income. Hopefully one day, this is kind of a dream, is to be able to retire or live entirely off this dividend income. That is a really tall order. You would need at least $1 million plus. But imagine being able to say you don't want to work for a certain job anymore. This kind of portfolio gives you that option. It gives you that kind of leverage in your life to say, I don't want to work anymore, or I don't want this job anymore. I want that job. It pays less, but it's something I enjoy doing. That's a whole other rant for another day, but that is why I am so focused on, really growing this portfolio. So let's look at my accounts, and I want to go in depth about why net worth isn't that important and what you own, like your assets, are more important. I'm not talking about like, a car or like an iPhone or whatever. I'm talking about businesses, stocks, property. My gain so far is a negative 8.7%. I am constantly dollar cost averaging into the market. So I don't expect this to really have a positive gain until, one, the stock market goes up like crazy, or the dividends that I've been receiving outpace the fluctuations of the market. So right now I'm down $1,800. Technically, my net worth could be even higher if I just left this as cash. But like I explained before, I want dividends. I want a passive income. If your money is in the bank, it makes no money. It's just losing money due to inflation. I am invested in various index funds. In another video, if you guys would like, I'm probably gonna make it anyway. I'm gonna go in depth to why I'm invested in these certain index funds. But remember, I had no idea what I was doing. So at least half of these, I technically don't want to be in them anymore, but might as well keep it because look at the negative money in there. And if I sell now, I lose that money, so I'm gonna keep it. Oh no, it's only up 61. Oh man, people were selling Tesla stock while I was looking. Yo, this morning, my Tesla stock was up 80%. And I was like, what the I bought this Tesla stock on a whim. I had leftover money from when I was day trading. I would say I lost about $2,000 day trading. I had about like $600 worth of stock left. I sold it all, just put it in Tesla. I was like, if it does well, it'll probably do better than my day trading was. Rolling it back. Basically, what I'm saying is your money invested will at times have a negative balance, but that's not important. The important is everything that you have, so what I do care about is this number here, 103 shares. No matter if the stock goes up, goes down, I have 103 shares, no matter what. The price of this stock will fluctuate over time. You can't argue it. It's going to change every time. However, this is an asset I own, and this is an asset that's paying me dividends. Not only that, it will also appreciate in value over time. A more accurate depiction of how the market is doing, I have my Roth ETF over here that, I put in $6,000 in 2019, and I put in another $6,000 2020. Just put in the money, invest it all at once, and whatever happens with the market happens. So this is down 5.12%, which is a loss of $636 if I were to sell it. The idea is about the same as my dividend portfolio, just I don't touch it. Getting back to the point I was trying to make, it's about the assets you have. It's not about your net worth, because your assets can depreciate in value, but they can go back up. Unless it's like a car that you bought new and you drove it and now it's like worth half. That's different. That's a different kind of asset. People probably wouldn't even consider cars as an asset at that point. So technically, I could have more money in the bank. Money in the bank does not put you ahead financially. Money in the bank is money that's just sitting there, being lazy. It's like having kids that don't leave the house, like me. So it's more important to have a goal that you can control rather than a goal that is at the whim of the market. So having $100,000 net worth is, it's nice to have, but it's not important. What is important is making sure you allocate a certain portion of your income towards your debt, your savings, and investments. I know 100% by 2021, I will have invested $25,000. That's a good goal to have. A bad goal to have is saying, oh, I want to be a millionaire. Oh, yeah, you could be a millionaire. Dude, I could be a millionaire working at McDonald's. But am I getting ahead financially? All that's happened is I have $1 million in the bank. Now, if someone had $1 million in the market, that is about $30,000 a year in their pocket by not doing any work. So who's ahead? The guy who's working every day has $1 million in the bank, or the other guy, he likes to work, he still goes to his job, but gets an extra $30,000 by not doing anything. Now, I think the person that's earning the extra $30,000 by not doing anything is far ahead of the person that needs to work every day to maintain their income. And that's why this dividend portfolio is so important to me. So I hope this gives you an idea of how to achieve your financial goals. Creating a budget helps you stay on course, and tracking your money allocation allows you to evaluate how well you are doing. I like to think of it as, where can I put my money now that can push me further in the future? Right now, if I were to evaluate my standing, with about $60,000 invested at a 3-ish% dividend income, I have increased my salary by $1,800 per year. And that's $1,800 I didn't work for. $1,800 that wasn't a bonus, $1,800 that wasn't a raise, $1,800 that wasn't getting a new job. Just for me putting money away, putting money I don't need away somewhere. And that is so powerful and so like crazy. It's so simple, but the fact that it works is kind of crazy. All you gotta do is be diligent and you're getting extra money. So no matter where you are in your financial journey, you can take steps to improve your financial standing. Every dollar towards debt, savings, or investment is $1 further from where you were yesterday. When you use that $1 on a phone or some random thing that's not productive, it doesn't take you anywhere. Instead, it keeps you where you are now, and even worse, it puts you back if it puts you in debt. I hope it helped you out. Share this video with anyone that it might help out too, and who might actually benefit from all this information. And subscribe to follow my financial journey. Thanks for watching, and I hope you're on your way to financial independence, because I think I am too.